What's up guys? So in this video I'll be going over how to draw support and resistance. So this will be an in-depth technical tutorial. So I'll be answering questions such as what's the difference between support and resistance and what makes a good support and resistance level, and I'll give some examples. So if you enjoy this type of content and you'd like to see more of it, I always appreciate it when you drop a like on these videos or leave some positive feedback in the comments, and of course subscribe to this channel if you haven't yet subscribed. Now, let's get back into support and resistance, where the first question that a lot of beginners might ask is, what is the difference between support and resistance? So the main difference between support and resistance, because they're extremely similar to one another, is it really depends on which direction price action is rejecting it from. So if, for example, we were, let's say that the bulls are temporarily in control of the market, and they're pushing it higher, like in this example right here. And now let's say that we reach a general price region or an area of where the bulls are failing to make further progress multiple times. So it's a region where they're getting rejected, and it's hard for them to push the price further up. Well, this for us can act as resistance. So if you'd like, you can think of this as a ceiling that's above you, an invisible ceiling that's sort of preventing you from going further to the upside. And again, this has to happen multiple times. So if it only occurs once, then it doesn't have as much significance as it does if it were to occur multiple times. And typically, the bigger the rejection, the better, because this typically signifies the fact that this is a stronger region of support or resistance. So now if we go to support, I'm sure you've guessed it by now, but support is basically the opposite of resistance, where if resistance is being rejected from the top, and typically this is where the bulls are attempting to make progress in the market, support is where the bears are attempting to push price further down, and they're having trouble to make more progress within a general price region. So as we can see over here, this is a general, I know it looks a bit sloppy, but this is a general price region where we can see that after multiple tests, the bears are having trouble pushing the price further down. So as you can see, they're quite similar, except it really depends on which direction price action is rejecting it from. Now, the reason why I mentioned price region, which is something that I want to clarify first, I personally think it's a common misconception that a lot of traders might have. So they'll hear the term support level or resistance level, which is commonly thrown around, and it's quite interchangeable in the trading community. But you should be aware of the fact that support or resistance is not a single price point. It's a composite of different prices within a general price range. So don't think of it as one price, but think of it as like a tight group of different prices. So like a cluster of prices. So a mistake that some traders might make is they might look at, let's say, the highest high that has formed, like right over here, or they might look at two different areas that have been rejected, and they'll take their horizontal line tool and they'll just pick a single price point, and they'll say, okay, this is my resistance. Every time this is tested, I'm going to sell. But the problem is that, of course, and you can see over here, I mean, I think this is a perfect example where price can get rejected despite reaching a single price point, which is why you look, again, at a price range. You have a general price region. So we can see this got rejected and this got rejected despite price action reaching two separate highs. So this is why I'll use I will use the horizontal line tool, just because it's a little bit cleaner than using the rectangular tool and it doesn't take up as much space. But you want to always consciously think of the fact that it's not a single price. And again, the opposite is also true, where some traders might look at, like, let's say the lowest low, or they might pick two different lows that have been rejected, and they'll say, okay, this is a single price point, I'm going to buy as soon as price action touches this level, and that's my support. But it's not. It's once again, you want to look at it as a general price region. So now, something that's quite interesting about support and resistance is that support can become resistance, and resistance can also become support. And this is quite interchangeable, and it's essentially an endless loop that continues forever within price action. So if we saw over here in the past, this was our general region of resistance. I think we could agree on this. And this was our general region of support. It wasn't perfect, but let's just say that this is just our general region. Well, now if we were to look to the left, and this is where technical analysis comes into play, or if we look at the past data to the left, and we were to stretch this general region of support, then we can see that despite this acting as support over here, this actually acted as resistance right over here. So twice, or I guess 3 or 4 times, depending on which time frame you're looking at, price action actually rejected this from the top. So this region of support actually acted as a resistance. And the same thing applies to this region over here that we drew, or that was our region of resistance. But now if we stretch this out to the left, then we can see that this also acted as a region of support, where the bears were attempting to push it lower, but they were having a bit of a conflict before, of course, they finally had enough strength to push this further down. Okay, so hopefully that makes a bit of sense for you guys. Hopefully that makes more sense. Sorry. Now let's continue with this. I will be drawing some more levels of support and resistance, and I will be showing you guys some tips on which horizontal price regions you want to pay attention to the most and why. So the first thing that you should be aware of is the fact that support and resistance is quite fractal. So it depends on fractals. And a fractal is essentially a pattern, a continuous pattern that keeps repeating across multiple time frames. So the same thing applies to support and resistance, where if we draw our support and resistance on one time frame, and in this example, I'm on the weekly chart for Euro USD, that region of support and resistance won't be as important on a lower or on a higher time frame. So let me actually draw an example for you guys so you see what I'm talking about. So if we were to look at this chart, and right now I'm not going to put too much emphasis on drawing a perfect region of support and resistance, but let's just say this region right here generally is a level of resistance, and this region over here, let's say this is our support, that also becomes our resistance. And let's do one more. Let's say this region over here is a general region of support. So this might be great if you're an intraday trader or perhaps a scalper that's using the 15-minute chart. But if you're a swing trader or a position trader, so someone who's using the long-term time frames, the higher time frames, then if you look at the daily chart, or especially the weekly chart, you could see how this becomes a little bit excessive if you start relying on the smaller time frames, because it gets to the point of where you're touching either a region of support or resistance, like essentially all the time. And it gets to the point of where this can get quite confusing for most traders, which is why it depends which time frame you're looking at to really know whether or not a region of support and resistance is important for you and if it has any significance. So this would have significance for those of you that are trading on the lower time frames, but someone who's trading on the higher time frames, this essentially has no significance. And the opposite would also be true, where let's say, in this case, let's say I'm using the rectangle tool. And let's say I draw this as a general region of support. So this might be fine on the weekly chart, but as soon as I drop down to the 4-hour, or let's say the 1-hour chart, you could see that it gets to the point of where price action is essentially bouncing back and forth inside this box, this rectangle that I drew on the weekly chart, and it has less significance because again, on the smaller time frames, having this gigantic box or this gigantic price range isn't as helpful. Now, it might be helpful when it comes to guiding you towards understanding the market cycles and the different types of market structure, which I can cover in a different video. But as you can see, it has less significance depending on which time frame we're looking at. So now that I got this out of the way, hopefully I didn't confuse you guys too much with that. Let me draw some levels of support and resistance, and I'll explain why I believe that these are good levels that you could potentially rely on and how you could draw them yourselves. So once again, I'm on the weekly chart, and first thing that I'll do is I'll start off with the horizontal line tool before I use the rectangle tool, for those of you that have a preference on whichever one you'd like to use. It doesn't really matter as long as you look at it as a price range. So the first thing that I like to do, actually, you know what? I'm going to delete this in the start. And the first thing I'm going to do is I'm going to take the paintbrush tool, or you could use any type of tool that you'd like. And what I like to do is I like to look for regions. So I like to zoom out first, look at the chart, and I'll look. I mean, you could start in the middle, you could start wherever you'd like. I usually start from the middle of the chart. And I look for regions that have been rejected the most, and where we see those rejections, where if we see the rejections, they're typically strong rejections. So for example, we could start right off over here, where we can see that as soon as price dropped further down to this level of about 1.162, it doesn't exactly matter which price we're looking at, but this general region of 1.16, we saw that price pushed further down, and then we saw this huge rally from the bulls, and then once again it retested this region. So I guess we could draw another circle over here and some circles over here, and we can see that after it rejected this region once again, let me zoom in for you guys. Once it rejected this region once again, that's when we saw a big rally to the upside. So as soon as the bulls made their way, I mean, you could think of this as like changing the floors of, like, let's say you're out on like an elevator and you're changing which floor you're on. So as soon as price pushed from the upside over here and then it retested this region, so right around here, it had trouble making further progress to the downside. And here's a key thing that you need to pay attention to, and that's that even though in this example right here, price pushed below this price region, so this would be our support, despite it pushing below this region, it rallied back to the upside quickly. So it had a V formation, and if this happens from the upside, this would basically be an A formation, or whatever you'd like to call it. And the reason why I don't like to include these as much, or why this is perhaps a sign that this is a good region of support, is because if we think about it logically, if the bears are attempting with all their strength to push it further down, and the bulls eat that progress up right afterwards, so it's a quick spike down. It didn't last very long. It lasted, again, we're on the weekly chart, it lasted 1, maybe 2 weeks, and then the bulls pushed it all the way back up. This shows me that this is a strong region of support that the bears had trouble rejecting and continuing and failed to continue further down from. Okay, so if I were to zoom out again, because we're looking at this price region, if I include this price point and then I scroll to the right, you could see that this lines up pretty well with other price action that also rejected this general region. So we had some rejections over here, we had some rejection over here, we had that V formation, and then when price rallied up to about 1.25, let's say, and it dropped back down below, we can see that as soon as dropped it back down below, let me actually zoom in for you guys, this will be easier. As soon as price dropped below this region that was support, as soon as it retested over here, we saw some wicks and some rejections where it failed to go further back up. So right over here, as soon as it dropped below, once again, this is where support would have turned into resistance. So that's how I already know, just by looking at these few points over here, that we have a general price region that has some significance. And of course, if we go further to the right, then we can see that this, once again, becomes that previous level of support that I drew right in the beginning of this video. Okay, so this tells me that, okay, this is a general price region that is showing a lot of significance to us, of where we saw multiple rejections. So I can use this as my support for the weekly chart because it has a lot of significance behind it. And as always, you want to remember to start from the left, and you want to sort of make sense of the market after each step. So you want to think about, okay, what happened after this rally? When it did rally and it retested this region, did we have a rejection? If we had a rejection, how big of a rejection was it? And then if it did break through that level, which it did over here, how much power did the bears or the bulls have in order to break through that level? And that's actually one thing that I forgot to mention, is that when you do look for regions of support and resistance, typically the best regions of support and resistance will get broken through with price action when there's a lot of strength. So as we could see over here, before this became our support, we had this big rally to the upside where the bulls showed a lot of strength over here. You could tell by all the green candles and how large they are and how much progress they're making. So this was a good sign that when we broke through, we had a lot of strength. And then once again, when we broke through over here, when the bears took control and flipped this back into resistance, you can agree, I think we can agree that this is a big move. So this move had some significance to it, which is a good sign once again. And if we scroll to the right, then we can see that this was resistance, and then this flipped back into support once again when we saw a significant rally to the upside. And now it's been holding up as support, and who knows what happens to it next, but that is something that you should be aware of. That's something quite important that hopefully helps you when you do draw your levels of support and resistance. So now going back to the horizontal line, so I don't forget about it, I'll just use it, and I'll use this general price region of where price action has tested many times, and this has turned into support and resistance, and I'll just draw a general line. So one thing that you can do with the line tool, for those of you that might not want to use the rectangular tool, is what I like to do is anytime I have this V or this A formation, which could also be market manipulation if we think about it, what I like to do is I like to ignore these regions unless they happen very frequently. But if in this case it's an anomaly where it happened once over here, I like to ignore this region, and I'll try to connect the horizontal line tool to the region of where I felt was tested the most. And this will typically line up with the closing prices of the candlesticks, if you guys use candlesticks charts. So if we were to once again look at this, we could see that price broke through, it retested, it wicked right over here, it closed over here where we had another wick. This was our V formation, it retested, it closed right about here, price rallied, it consolidated a bit, it dropped down, broke through this region, it retested again, it closed right around here, rejected this again, closed right around here. So right around this region is where I would draw I would use the horizontal line tool, and I would just draw this to represent a level of support or resistance. So this would be my region. Again, as mentioned before, this has to do with personal preference. So for those of you that want to have cleaner charts, this is one way that I would look at it. And then if you were to scroll to the right, we can see, okay, maybe this was a bit too high up because like right over here, price spiked way too low below this point. So you know what, let me just drop it a bit further down. So it's never going to be perfect, but this is something that I like to look at. I like to see how many times I could get candle closes and wicks to line up with this line, and then I can use this line as just a general guide of where, in this case, I have my current level of support. Now, if you want to use the rectangular tool, or the rectangle tool, then the only difference here is that, I mean, you can keep the line if you'd like, or you could delete it, but essentially you would just stretch out an equal box above or below this horizontal line, and then you just stretch this out to the right. Now, how wide or how thin you make this line is also personal preference. So if you make this line too wide, then when you start to draw more support and resistance above or below, which I'll get to in just a second, then the problem here is that you'll be testing it way too frequently. And of course, probability plays a big role in this. So you're never going to draw a region of support and resistance that is always going to capture every single move that goes and tests that region. It's never going to get every single rejection because, of course, like right over here, market manipulation or these V or A formations will occur. And so obviously, if I were to draw this over the entire move, then you can see that this turns into quite a large region of support and resistance, and then it looks quite ridiculous, honestly. So you don't want to make it too thin, but I like to stretch it out, and I like to either get some other closing price points. So like right over here, I'll try to get this closing price point. I'll try to get around these closing price points. I'll also try to include a couple of wicks if I possibly can. So I included these wicks. Let's see what else. If I stretch this to the right, okay, this is pretty close to these closing price points. I got this wick. I got this closing price point. So this, in my opinion, would be a good region of support and resistance. And then we could stretch this out to the left or to the right, and we could take advantage of it. Now, continuing from here, this is only one region, but obviously if we were to look at charts and do some technical analysis, you know that there's multiple regions of support and resistance. So how do we go about this next? Well, similar to what we did before, where I started off in the center and I looked for a region that was tested multiple times. The only difference now is that I'll look a bit higher or a bit lower, and once again, I'll try to pick a price point that's been tested multiple times. So I'll do this a bit faster for you guys so I don't drag this video on forever, but essentially if we look to the upside over here, we see that, okay, this region has been tested as resistance. This one has tested as support. We stretch this out to the right. Okay, this has acted as resistance. And it doesn't have to be perfect in the beginning. You can just draw some circles or pinpoint a general region, and then we can slowly narrow it down afterwards. So if I were to look at this from the left to the right, and if I try to make some sense of this, I believe this does make some sense, where price rallied to the upside. It broke through this region of past resistance that later became support, but it did reject this price range over here, and then this price range acted as support over here before we saw a big push to the downside, and then once again this acted as resistance multiple times over here. So this is my general price range, and now once again I'll get out the horizontal line tool and I'll try to see if I could connect as many points as possible. But as you guys can see, the problem here is that I'm probably not going to get this point and this region of support over here, plus this region of resistance. So I'm going to prioritize the region that has been tested multiple times. So despite this being tested once, or I guess twice, this region has been tested more times. So I'm going to prioritize that in the start. And so this can act as my next region of support and resistance. And I can stretch this out. I can use the rectangle tool, whatever you guys want to do. And now here's a tip for the following support and resistance regions. And this is something that I have noticed as someone who has been doing technical analysis for a number of years, I've noticed that when you do draw your levels of support and resistance, typically the range between two levels, so the general range between your support and your following level of resistance, or vice versa, if you were to measure this out, so in this case, this is a Forex chart, and this is about 500 pips, the next region of support and resistance will roughly be the same amount of space or very similar amount of space in between each other. So if this was about 500 pips, if I were to measure another 500 pips below, or let's say 400 pips, 450 pips, just a general range, but if you get where I'm going with this, this can give you a big clue as to where your next region of support and resistance is likely going to show up in. And as you can see, this lines up pretty closely to a region that has been tested multiple times as support, then flipped to resistance, then acted as resistance, acted as resistance once again. We saw this big manipulative spike where it quickly spiked up, quickly spiked down. I'm sure a lot of traders got kind of screwed over during this period of time. And then once again, we see over here that this acted as resistance. And then finally, when it broke through again, we had a lot of power from the bulls. So it was a quick rally to the upside with a lot of power. So again, I would, this is where I would take my horizontal line tool and I would try to line it up closely to a region where I could at least touch some of the wicks. And if I can't touch all of the wicks, then I at least try to get pretty close to the closing price points of where price action has tested the most amount of times. So as you can see over here, if we scroll to the left, again, this isn't going to be perfect, but this is a region that price broke through, retested as resistance, retested as resistance, resistance. We scroll through the right, flip to support. You get the idea. And so now I'm just going to roughly draw it right here. And this is where you can get your rectangle tool and stretch this out. And once again, if I were to draw this further out, let me do two more examples for you guys before I move on to something else. If I were to stretch this out, we could see, okay, our next region of resistance would be roughly around here. Because if we look to the left, we see that this acted as support, price broke through, retested, this acted as resistance. We had this larger V formation, then it retested as support. This didn't quite reach this level, it's a bit further off, but we can see that this region was rejected as support. Once again, it broke through, became resistance, then over here became resistance. So right around this region is roughly where I would draw my next resistance. And again, if we were to measure this out, if we were to take the measuring tool, then we can see this is about, let's see, 450 pips away. So roughly on the weekly chart, we can see that every 400 to 500 pips or so, that's where our next level of support or level of resistance is at. And so I can just based on doing this for a number of years, I could look at the chart and generally figure out, okay, right over here, this is where price has tested multiple times as support. It's tested this region multiple times as resistance in the past. This is our next level. And you can keep going on with this essentially forever. Now, the last thing that I wanted to point out after drawing this on the weekly chart is, okay, what if I want to have multiple levels of support and resistance? So I don't just want to use the weekly chart, but I also want to use, let's say, the 4-hour chart. Well, one thing that you can do is if, let's say I drew this, these regions of support and resistance on the weekly chart, and now I drop down to the 4-hour chart, one way that you could prevent yourself from being confused is obviously if you have the option, go into the settings, go into visibility, and select the region of support and resistance that you drew on the weekly chart, and you should deselect it for the hourly chart or the daily chart or the minutes chart. That's just personal preference if you'd like to keep it like that. And if not, if you'd like to have multiple support and resistance levels drawn at once, then simply be aware of the fact that this is a much larger region of support and resistance. So if you're looking at the smaller time frame, it's not going to be as useful. But one thing that it can be useful for is to show you that when price action is approaching this on the smaller time frame, so in this case I'm on the smaller 4-hour chart, this region will act will have more strength compared to the smaller levels of support and resistance. So right as price touches this level, we can see that just because price touched this weekly level of support, it didn't exactly reject it at this price range because it's a large price range. But we can see that you should be aware of the fact that when price is ranging or playing around within this price region on the smaller time frames, there's a greater likelihood, and it's simply probability, but a greater likelihood that it's going to reject this region on the smaller time frames, because the higher time frames typically dictate which direction the market is going in. So the market cycles, the larger market cycles on the higher time frames will have a greater priority, and they'll have more strength compared to what's happening on the smaller time frame. So that's something you should be aware of. But if you are already aware of this, then if you also want to draw more levels of support and resistance, you're free to do it, obviously, on the smaller time frames. But one tip that I would give you is you should probably, instead of having dozens of different horizontal lines, which can get quite confusing, just use the rectangle tool and just change what type of color you're using. So in this case, I had a gray rectangle drawn for the weekly levels of support and resistance, but in this case, I'll change it to blue. And so now I can do the same logic that I did before on the weekly charts, but apply it to the 4-hour charts, where once again, we look for a region that's been tested multiple times or broken through with enough strength. So we can see, okay, this has been broken through. A lot of strength was needed by the bears to push this further down. This general region was rejected. All of these highs or tops were rejected. Okay, I think it's fair to say that this would be a general region of where we have resistance. And again, the same thing applies, where you would continue doing this, where you would take the next step, you would look at the next region. Typically, it would be pretty spaced out, so you don't want to look like you wouldn't look logically at the next retracement point and then draw your next level right over here and then continue this forever, because this would be quite repetitive and it would be too close. But again, you would look at the next significant region where we saw some rejections, which is right over here, and once again we would draw our support right over here. And this makes sense because price rejected this from the bottom. We touched the wicks over here, rejected this from the bottom, rejected this from the bottom. We saw a V formation, followed by this turning into resistance. This was resistance. We saw a big move push to the upside. This acted as support, big move to the downside. And once again, this became our resistance. And we would repeat this essentially forever. So if we were to space this out, this is roughly 80 pips. Okay, let's just take a wild guess that right around here, 80 pips from here, this would be our next region of support. And as you can see, it's typically how it lines up, and this repeats forever. And then when we go onto our weekly chart, you see that this looks quite messy, but at least we have this in a different color so it doesn't confuse us. And if we always want, we could go on to the settings and we could turn this off so that it's not visible on the higher time frames, but when we go on to the lower time frames, these would be visible. So I hope these tips have helped. I can always make a part 2 for you guys if you'd like. and I hope I answered all of the questions that you might have had. If you do still have any questions or concerns or something that you'd like for me to clarify, be sure to drop it down in the comments. And I hope this video helped, and I look forward to speaking to you in the next one.